Hello, everyone. It's Brian the Tiny Crypto Blog. It is Friday, March 15th, starting this one at 8:51 C Central Standard Time. Hope everyone is doing well. Hope you're having a good week. Hope things are good for you. This is going to be a short one today because there's just not a lot happening. There's not a lot of interesting news. We don't have any massive drama. We could say Craig Wright is having yet another court case and just showing the guy as a basket and a half. We could see that prices, there's some go up, there's some go down, there's some go sideways. I think if anything, there's a consolidation, there's a pause going on where people are taking some profits and throwing them around into some altcoins, or maybe we should get a new term. Instead of altcoins, we should call it something else. Don't know what, but for now, I'll just generically use altcoins. What else have we got? Yeah, it's a consolidation phase. Maybe people will cash in. Maybe there'll be new news. Maybe it'll go higher. It remains to be seen. But definitely, the sentiment is bullish. Bitcoin ETFs, that's kind of what I'm rolling around to. Actually, before I do that, Ethereum had an upgrade. Let's bring it up. It had an upgrade. What it does is, technically it was a hard fork code upgrade, so completely new chain ended up being created, and essentially the upgrade plays around with the protocol and makes room for roll-up. So a roll-up, a lot of layer 2 solutions. If you think like Bitcoin and the Lightning Network, it takes a lot of transactions off-chain, bundles them, and then you get your on-chain transaction. Well, that creates just the growing ecosystem of layer 2s. All those transactions, even the stuff that's on-chain, that takes up a lot of space. So this will open up space, and the theory of it is that it would reduce the gas fees for these transactions by these layer 2 networks. And people are thinking incentives being incentives, people being people, this could lead to a fee dropping war. Well, anyway, if the fees go down, and I haven't had a chance to really look at this in detail, the question comes to mind: does this reduce the fees, the overall Ethereum gas fees that are required? If it does, my question is, does that mean Ethereum and its supply will become inflationary for a time? Because as I understand it, when it went from proof of work to proof of stake, shortly thereafter, there was an upgrade that burned Ether, meaning it was burned, sent to an address that could never be recovered. And some of the gas fees were burned. Some of the rest of the fees went to the miners. Does that mean between, on the other side of the coin, so you've got that Ether being burned, on the other side of the coin, you have the Ether being created from staking. So does that mean if the amount of Ether being, and with the current balance, Ether became deflationary, where the overall supply, at least on a longer term trend line now, has decreased from when the protocol and the code was implemented? So if the amount of Ether being burned decreases, does that mean the balance goes back to Ether being inflationary? Again, this is technical details I have not looked up, but that's one of the questions that came to mind. The other thing, let us go to the other main juice. Are we there? We are there. Bitcoin ETF inflows. So one of the questions was, See how we're looking on the screen? Good. ETF inflows, net inflows, equaled 30,000 BTC. Known entities like exchanges and miners had 3 million BTC, including 1.5 by US entities. If this rate and trend were to continue, we'd see a sell-side liquidity within a crisis within 6 months, meaning the amount of supply, let's go on to slide 2. Does this say anything? No, essentially saying that if the accumulation starts picking up, eventually, traditionally, the exchanges would get coins that they use for trading, for redemptions, either from people depositing it or from miners. Maybe there's OTC, maybe there's large players. I don't know all the inside details. But with the halvening, and yes, I like pronouncing it the halvening and not the halving, the halvening. With the halvening coming up, the amount of new daily supply is going to decrease. And essentially, it's the supply is going to get pinched, where the demand is going to reach a point for supply where the exchanges, it's going to get drawn down from exchanges, and it's also going to get drawn down from the over-the-counter market, from suppliers, from miners. We're just going to see it's like a huge sponge is soaking up all the liquid, and pretty soon that pinch is going to be felt, and we're going to see the effects of this demand pressure coming in. And this is just US-based ETFs. And this is before, I don't know if I can find it. I don't think I can. I'll see if I can real quick. I'm going to look this up. I might have mentioned this a week or two ago. I believe it was the chair of BitGo, which is a custody company. BitGo. I don't see. Maybe this will give me what I want to see. It is a video. The CEO of BitGo was saying that we'd start seeing the second order effects after the Bitcoin ETFs come into play. You've got investment funds that start buying up the Bitcoin shares, the Bitcoin ETF, to get exposure to the asset. It's derivative exposure, but you're still getting that exposure. And for people, that's fine. All they want are returns, and Bitcoin ETFs are going to do fine, or should do fine in this bull cycle. And you'll have family offices. It's the same with GBTC in 2021. In this case, you've got the ETFs, which are multiple times more liquid. And that's going to create buying pressure as well. So we're just going to see, it's almost like, I'm trying to figure out if a drain would even be an applicable thing, but you're going to see a huge pool. What was before a small pool of demand that would draw off this, that pool is just getting multitudes bigger. I think there's a lot of people that don't understand just how big the scale is changing for this demand and how much of an effect it's going to have. I can't even visualize the full effect. This will the results will remain to be seen, but it's going to happen. So that was basically it. Oh, son of a gun! I didn't even. And there we go. Bitcoin supply squeeze. Yeah, see, I'm not even on the ball. There's nothing to talk about. There's no drama. All the bear market drama is dead. It's all about prices, and minor news. So yeah, that wraps it up. This was the only thing that really came to mind that I felt that was worth sharing. Everything else is just jibber jabber, jibber jabber, jibber jabber. So follow Tiny Crypto Blog at tinycryptoblog.com at all these social media sites listed in the show notes. And with that, be well, everyone.